Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. How is everyone doing today? There was some pretty decent trading today. Hope everybody could take advantage. But if you didn't have the setups, you sit out because, you got the big Fed meeting on Wednesday afternoon. If you're a longer term trader, you don't always have to trade. You take advantage of the good setups when they appear. Hello, George. Hello, Patrick. Let me put up Patrick a little longer. I clicked a little too quick. Hello, Davey. Good afternoon. Chris. What do you, Money Mike does? Well, A, I'm not a wizard. B, it's the probabilities, and I'm not always right. Uh, so you're welcome. I'm trying to teach you technical analysis and probabilities. Probabilities have a probability associated with them not working. Again, you follow the probabilities, you take the trades. That's what you do. As long as you align the probabilities in your favor, you have a statistical advantage. Then if you manage your risk and have proper reward to risk, you can have a positive net expectancy, which if that went over your head, then you're in the right place. If you get it, you're still in the right place. So I guess we're all in the right place. I'm just glad I can teach people some stuff I know. Yes, now we're going to smash the like button. And if you're not already a subscriber, we're one subscriber away from 5,500. Then we're going to start making the big push to 6,000. Yes, give Mike a thumbs up today. But yeah, I didn't even put up the subscribe. There we go. Please do consider subscribing, ringing that bell, and hitting the like button. All the channel support really does matter. And for everyone that does come back and leave a comment after the live stream, it helps. If you want to get people learning some good things, then please do that. Sterling with the lot of posting today on Twitter. Thank you very much, Sterling, posting a lot of stuff. I'm short. Need a sledgehammer Wednesday. Again, remember, you can also trade around a core position, or your core position can very well be short, and I think it should be short. And then you trade around it with long trades when they execute. We'll go through some stuff. All right. Tomorrow, building permits, housing starts. The numbers today. Oh boy. Oh, let me just housing index. That was just horrible. And what was the response? Let's buy some housing stocks. I gotta love the market. Oh, tomorrow we got more housing stuff at 7:30. Not really gonna move the market. Market doesn't care that housing's going in the toilet. And it's going to take a while for housing to roll over in the CPI. We got Red Book at 755, very minor. I like to watch how that reacts, and then nothing else. Remember, everything's on Wednesday. You got Apple. I'm going to go over some Apple stuff today. There's some good stuff in Apple. Apple, Tesla, Amazon, Meta, Google. Google's sort of flat. Microsoft was the only mega cap that was sort of really down. But Apple leading the charge up. There were some interesting plays in Apple today. I will go over them for educational purposes. Healthcare taking it in the shorts on the market rally. Remember, that happens a lot. I consider this more risk on. I hate that statement too, and I'm just using it because so many people talk about it. It's risk on or risk off. Well, it depends what sector you're in, but when the overall market, when you have technology chugging along, when you have more growth stuff, when you have people just sloshing into the same old growth names, healthcare does the pullback. Just remember that when you have the general growth stocks tanking, healthcare generally does better. It trades opposite. FOMC for Wednesday, still 82% on that 75 basis point. We are still in negative gamma. So exaggerated moves both to the upside and the downside. No earnings after the close. We'll also peek in at AutoZone because at double, The gap fill, as Sterling outlined on the Twitter feed, was the play. The double never confirmed or triggered. Nothing. That's why you analyze it both ways. AutoZone big heading back to the 200. Tomorrow, nothing much before the open. There's actually not much. Oh, besides my favorite wardrobe company, Stitch Fix, they don't sell tie dyes. Why would I shop there? So, okay, let's see where we sit. Apple's gonna eventually contract. Remember, you got mega caps that can really run the indices. Apple's over 7% of the S&P. Apple's got a really big day. It doesn't take much to really kick the S&P in high gear. Oh, by the way, for all the stuff that if I hear Fed pause pivot one more time, I'm just gonna puke. The Fed whisperer, as known, Nick Timiraos, article out today, Wall Street Journal. Just you got to pay attention to stuff. I don't think it's a coincidence. It's coming out Monday just to reinforce they're not kidding. There's not gonna be, they're just reiterating. Hey, they cheered the decline. Powell, had to scrap his original speech for Jackson Hole and really let the markets know. So again, when this comes out 2 days from the Fed whisper before the rate hikes, it's going 75. It's going 75, and there will be I think they're going to then be targeting 50 at a minimum for November, but they'll still say data dependent. I think they're trying to reiterate, if we say data dependent doesn't mean we're pivoting. So we can very well get the whack-a-mole. Remember, we got daily cycles starting to turn up on the S&P. Let's see what they can bounce. Also, weekly cycles. So we got a little room to run. Now, daily rotation zone right at that 50% retracement, triggering the double. We got momentum off the open. I got to ask this completely stupid question today. Why don't I talk about momentum in the morning live streams as a setup? Because momentum didn't happen yet. I cannot predict when the momentum bars are going to kick in. There is nothing I found that's reliable to predict when you're going to get the market momentum right off the open. It's why you got to learn this stuff. This was market momentum. All right. Retesting the highs. Pull back. Nice little pullback. What do you start watching? Going into the European close. That's why I teach people. Pullback, 15-minute rotation zone. Yes, there was a mini double. And then hugging that rotation zone. Finally, the breakout after the retest. And this actually confirmed the double right here, but not triggered. This triggered it. Could have easily been entered on a pullback. All right. Also, I talked about if it was above Friday's high, there was the aggressive play. And then as long as it closed above Friday's high, so not only did you have the double, which can be very helpful for managing the positions, you also got the short-term little buy. Is this a long-term buy? No. We should see some follow-through tomorrow. But worst case is if you took advantage of it intraday, just trying to teach you what you can do with these kind of things. You get in here, you even get in on a little pullback. They can get your stop at a very low risk position, and even more aggressive. If you really want to get aggressive, get it to break even after you unwind something. But here's what I love to do. You unwind something, and then you use that cushion from the unwind. So, let's say you grabbed 4 or 5 point or whatever you grabbed. You know, let's say you grabbed 4 or 5 points or even 10 points in the S&P. You can leave your stop, you know, let's just 10. Let's just say you entered at 39.06 on this pullback. All right. So you could easily use that 10 points to keep your stop back below the key support area now. So if it does come back and stop you out, yeah, you take a loss on your remaining position, but you've offset it with that gains because you're also trying to play for now since it rolled into a bigger position. Now remember, your probabilities don't increase just because you had two separate signals trigger. I'd use the probabilities, if they haven't been tested together, I'd use the probability of the higher entry. But these are both, you know, around that 70% that you should easily see some follow through now to the daily rotation zone. So that's how you roll an intraday play into a slightly more substantial play. Is this a play that you're trying to hang on to even to take out the highs from September 13th? No. These plays have targets. They are short-term bounce trades. They're not long-term investment trades. They're very different. Hoping that makes sense to people, because if I keep getting stupid questions, I might have to stop live streaming. It'll just drive me too crazy. Key support on a pullback, 39.02. Any pullback, I'd be watching the 1 hour rotation zone. If you're watching for a zone, which is it's the more professional way to trade, because support resistance is not a brick wall. I'd be watching between 38.94 to 39.02 with a rising 1 hour rotation zone. There you go. Would not be surprised, maybe not before we close in 12 minutes, but upon reopening, especially Asian session, would not be surprised to at least tag the stop reduction on the double. Systematic approach. Remember also, I talked about this morning, clear path. We're into the clear path move. The breakdown zone on the clear path is 39.50. Trying to make this as easy as possible for people because trading is challenging enough. If you're not a short-term trader, you're only a long-term trader, then you're sitting on your hands because this is not the move for you. Swing trader, yes, you could take advantage of this move. But like a multi-week or weekly or monthly trader, no, this isn't for you. George is ready to reposition his Qs short for Wednesday. How high can we bounce? That's where I like to use these targets. So let's take a look. Since you're looking at the Qs. All right. And I like using the futures and then applying it to the spiders or the Qs. Why? Because you're getting more information from the futures. Because they trade nearly 24 hours a day. Okay? 23 hours a day. So you can roughly map out the levels. Same thing on your confirming, pullback, blah, 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 blah. So this has already hit stop reduction. You don't want this to pull back as far on the Qs. It would be more so the key area. Really don't want to see it dropping below that 1 hour rotation zone. The preferable pullback area is really between, if we get that pullback, by the way, the first pullback area, I'd still use this 12,012, so 12,000. Then it'd be 1973 to 1946 with the rising 1 hour rotation zone. So 12,139 would be your NASDAQ target. I would not ignore this target though and start watching in this area for a for reposition the Qs. Why? You can see here significant support, break below it, retested with resistance. So this is already a retested resistance area and the second target on the double. There you go. There we go. So that's, again, now, did this trigger a short-term bounce? Yes. Yes. Could this even on a short-term bounce get up to within the daily rotation zone? Yes. So that's where you could always leave a little something on to trail. But the next major targets are these double targets. Those are for the double. For the daily buy, it's anywhere within the daily rotation zone. Now, let me do one other thing. Let me take off these longer term levels. Let me even take off these. The other key things you should be watching for, I would be watching based off the daily bounce pattern %B. I'd really be focused on follow through over the next couple days. The major target, if we did get substantial follow through, would be this 12,382. The next, from the %B, not from the double bottom, but the next target area I'd be looking at from the for a minimum racing stop from the %B would be about 12,190 to 12,231. Why that area? You got our retracement harmonic and the daily rotation zone just below that, and key close reversal bar right here. That's how you put together price action, harmonics, rotation zones. It's daily cycles at the bottom. Boy, I sound boring. Double on the Dow. Don't need to go through everything. But when trading gets boring, it's good. Gonna rotate these to the forward with this bounce. Closing in on the second target. I'm not gonna blah, 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 repeat myself. Next target area you see, your rotation zone, your 37.5, and the double targets all in the same vicinity. Right in front of 31.4. There you go. Key, everybody should be able to use their knowledge now. Pullback area. Right in here. There you go. With the rising 1 hour rotation zone. There was no double, remember, on the Russell, and the Russell did not trigger any daily buy pattern. So that's one, I focus on the things that actually trigger. You don't need to be in every indice. You can even be one or two. You probably shouldn't be in every one of them. The actual Russell still, we do have a slight gap to the upside, but that's roughly to this 1830 area. That would be my next target higher than the daily rotation zone. The only bigger thing is this valid? Yes. Nah, no. Never mind. No. Sorry. I'll get to more questions in a second. I'm just seeing where this is. And then the 50%, about 1851. DAX, no double there either. No %B buy. Still a gap left behind. So I might, again, the target is 12,965 area. 963. Notes actually broke below the lows for mid-June today by it's half of the 32nd. But this is technically a new low. It's why I have the harmonics flipped. And the cycles are turning up with this pretty sideways move so far. So any bounce I'd be watching still for a rollover play. Dollar index, inside bar. VIX, breaking down here. Breaking down. Is this a potential double for a follow through? Yes. On the daily. So I'm focusing tomorrow on the lows from the 15th. And now I have targets for a continued rally trade. But it would be from the 15th low. Crude. Boy, all right, I'm going to go nuts with this friggin'. Why are we releasing more from the Strategic Petroleum Reserve today? What, just to keep gas prices low going into the friggin' midterms? Putting the whole Strategic Petroleum Reserve at jeopardy? No aggressive. There is an aggressive buy on a daily close above today's high. Cycle's still not getting to the bottom, but getting closer. And the potential double is still in play. But please, come on. Can we stop with this reserve thing? Please. Another, what was it, 10 million barrels? Oh. Oh. And but yeah, just big momentum reversal into a clear path. That's where it's handy to know clear path moves. Because you start getting momentum back into a clear path, you can come up with good targets. That's why it's real. And this is a picture perfect clear path move. This is called a simple clear path. This is pretty much picture perfect. So snapshot that one on your charts if you want a reminder of what a picture perfect clear path move looks like. That's not advanced. That's a simple clear path move. Take it off the 1 hour crude chart. Beautiful thing of beauty. Remember, natural gas, this is why we wait for confirmation on the close. If you're trying to front run a pattern and you get this kind of bar, you are not carrying it forward. Did this confirm the double top in natural gas? Yes. Did it trigger it? No. Not even close. That's why many times you get stop hunting moves like this, and then you get a buy reversal in here. So is it confirmed? Yes. Is it triggered? No. Bitcoin, not a surprising move after again retest the 87.5. Watching for the next rollover play in Bitcoin. It looks like today we'll set up an aggressive bounce buy pattern just like everything else. Tomorrow if you close above today's high. But that's only for a bounce trade. Tesla, double is up. That never confirmed or triggered triple top into the cluster area. I'm going to take off some of this now, finally. This mess. Don't even need that. So on follow through, this is also really good. Now I'm just going to bump this up because we already know this is another great area to use your reverse harmonics. From the low on the 6th back to the high on the 16th. So we get through the high on the 16th. You have targets of 320.78, 326.90. All right. Key things I'd be watching is the daily rotation zones for any pull backwards. Supports coming in at 300. And then your major support's about 293. Good evening, Anissa. Is it true we are sending oil from our strategic reserves to sell to NATO allies? Somebody else, let me know if you have that info. Yeah, well, I know we were doing stuff with China. It's just absurd. And I don't like to get political on this channel, but this is absolutely absurdity what we're doing with the Strategic Petroleum Reserve. Absolutely absurd. It's there for emergencies, not just to lower gas prices over the summer and into midterms. Stop playing with that crap. And I have no affiliation with either party. I'm an independent libertarian, if anybody wants to know. I want the government to hell out of our lives besides national defense in a couple key areas. Because they can't manage shit all. And you know I don't normally swear. Look at our friggin' government. We pay our taxes to the SEC that, wouldn't stop a fraud if it ran them over. Gosh, why do my tax dollars go to this crap? Well, yeah. And we can't do better than, what percentage of Congress is over 70? Really? Get rid of them all. All right, I wanted to go through something with Apple. I already talked about road. This is handy. This is handy. Handy, 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 handy. I'm trying to teach something here. So if you don't want to learn, leave. I'm done with I guess I'm going to be somewhat of an asshole. Because I'm done with stupid. I am really at the end of stupid. And I'm not talking to anybody specifically here besides one person. Because you don't want to learn that one person who regurgitates just idiotic, inane crap every day. It's not even like you can have it. I don't care if somebody has a different opinion. If you're just going to come on here and regurgitate stupid, then don't bother. You don't even want to learn. It's not even like you want to have a debate or a conversation or give informs or what you think about something. Don't come on here and be an idiot. Jeez, I'm tired of this crap. All right, Apple. For anybody new, first, gap down. Show you a couple things. Gap down. I'll show everybody. It's good to review. Before I even get to that, what did I say before? We had a divergence down here. All right. Sorry. A divergence down here. We went to oversold, bounced, made new lows, dipping below a harmonic a couple times, higher RSI, cycles at the bottom. Does that mean you blindly buy? No, not in my book. Erase this green bar. We did, as I said, had an aggressive buy on a close above Friday's high. What else do we have? So do you know it's going to close above Friday's high? No. You had a gap down. We had market momentum. Clear path move going up. So when you do trade back in this area, this is a really nice example of a simple clear path moving up. These candles right here. Before then, you got momentum kicking in on the market. This is where look for your high probability trades. Where's the first thing I'm going to look for? A pause between the 50 and the 62. You get the close above the 62.5, target in the gap fill. It keeps running with the strong market. What's the next target? Would be the Friday's high area. And you can use some harmonics off the shorter term charts. You get a nice pause there. What then happens? This is a double. This pulled back. You got to have it pull back to at least a 75% harmonic. 149.12. What was the low? 149.10. Qualifies. You get it confirmed. Okay. Here's a nice pullback. You also know how I like to go to 15-minute rotation zone. So if you didn't buy a break, which is fine, look, you get a really thing of beauty pullback. Yeah, it hit the stop reduction, but you can always just use a tighter stop on that one if you're trading it intraday. And then you also had the break above. What's this line at? This line, this black line is Friday's highs. So not only did you confirm trigger to double, you got the pullback to Friday's highs, and we were watching for a separate strategy on intraday break above Friday's highs. Now, as long as it's going to close, it can be carried. Well, you're running up. You have hit your full double targets. That's done. And some can be carried, or there could be two separate trades. So the doubles done, but a separate target now can be carried. And I would definitely have my stop. This would not be break even for unwinding some and then risking that. This would just be the amount that this ran up within spitting distance of the daily rotation zone. This would, worst case, be a stop at break even. Why? Let's use some common sense. Even just use single bar harmonics. Look where this is. You start wiping out 50% of this bar, even 62% of which takes you back to virtually the break-even stop. Do I want to be in this trade anymore? No. So, that's how you can do a trade. Now you raise your stop. Do I know how much this is going to follow through? No, I don't. Do I have an idea? I'm going to be watching within this area. And what can we do? Well, we're at the 37.5. What's the next key area? By the way, this is an advanced clear path. And the next key area on would at least be 156.32 besides using shorter term levels. And you can use the end. It virtually got to the end of this also 4-hour clear path, which is also a stop raise. The end of the clear path is not here, it's here. So you can easily continue to trailing up a stop. A key area I'd be watching for major topping potential area would be the top of the rotation zone and the 50. The only way I'd carry it longer is if you got a close above the 62.5, which would be tomorrow. Because of Fed on Wednesday. So this area could be used for partial, again, reduction, taking some profits, or a stop reduction at least. Does that make sense? And I don't care if you trade Apple or not, if you trade a future or not, or if you trade FX, or if you trade crypto garbage, it doesn't matter. That's a way you can put concepts together. Completely agree. Our political problem is an establishment problem. Yep. The more I do this, the more I look for these continuing multiple significant levels meeting in small range like the Apple double and previous close level. I missed that one. And you might not have been looking at Apple because you're not going to be able to look at everything. I was just using a very good example of something that had great momentum today that triggered a number of patterns. And it doesn't matter if you missed it or didn't see it or wanted to refine your trading. It's practice, practice, practice. Learning, learning, learning. I just wasn't trying to suggest any trade in Apple. You know I can't do that. especially with the amount of stupid out there trying to teach something to get it through some people. Because if I can get at least 10 people who are doing good, then I've done my job. Then they can pay it forward. Then they can eventually teach people and help them. And you can apply these same concepts from a daily to weekly time frame. I'm just using why it's nice to do things on a shorter time frame for a teaching perspective is because if I'm watching for these kind of daily to roll into weekly setups, to roll into monthly trades, they're not all the time. You can find setups like this more frequently, but the same concepts apply. All right. Oh, AutoZone. Just as because we talked about it this morning. Oh. I hit AZN. I was like, that's not the AutoZone chart. So we had a potential double. We had a gap up. The double never even you never even got price action to confirm it today. So then you pulled back. By the way, the double is now clearly off the table. This is why you don't front run patterns. I know Sterling put a lot of this up there. But you had your gap fill. This triggered, even with this, you got the only thing that invalidates as a gap fill from my testing is to get to new highs. So you have to take that into account. But this was a gift gap up for the intraday gap up because this is a thinly traded stock. You'll get these kind of intraday gaps. But this, it triggered the double fill on here. This gave an even bigger entry. And then, yeah, that filled the double, and then you just got momentum to the downside. But this is a pretty key outside reversal bar. So, are we going to try to buy the 200, not just off a bar like this? Needs a better entry signal. But that's the way you plan for both sides of a trade. The short triggered. The double bottom did not trigger. So it's off. It's done. It's gone. There, I did some teaching today. Hopefully we get some more subscribers. To show everyone how powerful the harmonics are and why to wait for the bar closes, pull up the gap fill harmonics on the XPO on the 4-hour chart and look at the way the 62.5 has held the close. Sorry, still had... Yeah, it's still pausing there. You never got that 4-hour close. This should still fill the gap. I definitely, because we got even the shorter term, but it's on the longer term, it's still held there. I'd still be playing for a gap fill on this. But yeah, that's your gap fill harmonics. Remember, longer term closes are more important than shorter term closes. Just the way it is. A weekly close is more important than a daily close. A daily close is more important than a 4-hour close. 4 hours more important than 1 hour. And please don't tell me we closed above. I've had this before. We closed above the gap fill harmonics on a 1-minute bar. Okay? And that's the only bar that ever closed above them. Or any level. It's like... Oh, we closed above a 62.5% retracement harmonic on a 1 minute, and it never closed on any other time frame above that bar. Should I play for the higher prices? No. Don't be a moron. All right. I think you got some plenty of play left in XPO before this is pretty major support. I'd still be watching for that gap fill play. It's not nothing's guaranteed though. Manage your risk. All right, UPS. That actually closed really nice. That triggered a daily aggressive percent B buy. Gap fill harmonics. So tomorrow, if we get follow through, you got 180.61. Key area watching UPS tomorrow. Put it on your tick chart. If it closes above there, it's guaranteed on a one tick chart. Joke, don't do that. Right back between. So we should. It's interesting today because you got this little pause area right in front of there. So that could be an interesting play for tomorrow, especially with 4-hour cycles still running and daily cycles turning up. Interesting potential UPS play before another. Now, is this a long-term play? No. Longer term, I'd be watching for another rollover play. That would be a short-term play. What I've been blown away by is how much price action happens around the significant harmonics levels. Yes. The more you play with them, the more you study them, the more you learn them, the more you'll see how it's why I wouldn't put them out there if I did not do years of testing on it. Funny thing is some people look at it once, go, oh, that didn't work into the tick, and then discard it, which is fine by me because you're just discarding it. Well, I don't want everybody to learn it. Why? Because people screw it up. Uh, I don't understand that question, 8. China opens up until. I don't understand what that means. So I would, if you're looking for an intraday plays, watch UPS. Actually, UPS will be a great long-term play at some point. I was just looking at some of the fundamentals. I think they're going to have some pretty significant earnings compression going in, but this, boy, it would be. I think UPS would be a gift if we get this start getting hammered. If FedEx is right, we're going to have some pretty decent recession, and we can get UPS, to return to its 200 on the weekly with the kind of numbers it has now. That could get interesting for building, especially with the dividend play. Interesting. I already talked about Intel. This would probably be entering the same boat as Intel at that point for me. UPS is not going away. It will get earnings compression. So the PD sitting at 1420 will get compressed based off of if we get into a decent recession. However, the earnings yield on a pullback will go up. PDE will drop even more. You got some technical setups here. Could be a long-term core gift building stock. These are the kind of things I love to look. I'm going to have to start charging for this kind of stuff. I need to re-roll out a stock product soon. China's opening up from COVID lockdown. The question is for how long? I think they're still in that stupid zero COVID policy. So the moment, and we're going into colder weather, I think you'll still, the open ups will be short until they abandon that zero COVID, which I don't think they will because it's got Z all wrapped up in it and would make him look like he's a little weaker if he abandoned that. I think you'll see the short-term open ups, but we'll keep getting more and more lockdowns fall and winter in China. Oh, really, Coco? ES bull flag on a weekly chart, that's a very steep flag pattern. That's not even a decent flag. That's not even, this is not a flag pattern. I shouldn't even call it a steep flag pattern. It's not even a decent channel pattern. Wouldn't trade it as such. Oh, I'm not pissed. I'm just aggravated. I'm tired of stupid. I've hit my limit with stupid. I've hit my limit with stupid comments. Stupid, stupid, stupid. I'll say there are economic reasons for Z in China has pivoted to a zero COVID policy. And we're not, you know what? I just don't think they're pivoting away from it, at least for the time being. All right, just a final recap. The buys, the short-term bounce triggered with daily cycles turning up and weekly cycles potentially turning up. So this could translate, even with the Fed meeting, into a slightly bigger bounce. I'm watching for a return to the daily rotation zone at least, and the completion of the little double targets on the S&P, NASDAQ, and Dow. With that, hope everybody learned something. I will wrap it up for now. Again, come back and leave some comments, like the videos, and I will see everyone tomorrow morning. Talk to you later.